volumes as well. As I said, we'll turn the gaze on stocks in a bit from now. But Aman Chowhan is joining us, fund manager at Abakkus Asset Management. Aman, good to have you with us here. Thank you very much for your time. You know, the rally has been just eye-popping, to say the least, mid-caps and small-caps over the last one and a half, 2 months or so now. Aman, what's the broad approach before we get to what you like and what you're buying and selling? Should one start to look at booking profits where you're making, very healthy money? And what's the broad approach to the market now that retail investors should follow?
Yeah, it's been a massive rally, 2.5 months now. 31st March was the day when we saw the lows, and post that, right from the first week of April, the mid and small caps have been in an up move. And it's also joined with the global moves, like global markets have also recovered, and that has also helped. And we have seen massive liquidity coming into India. The FIs were net sellers have turned buyers, and we are also seeing the kind of flows that we are seeing in both domestically as well as FIs. And that has all contributed to this rally. We can't paint a single brush to all the companies, whether it's time to book profits or no, but definitely in small caps and micro caps, this is the time when you see liquidity. This is the time when you see volume. So if somebody or some of your holdings is at a valuation where you're not comfortable with, or you made decent money, it definitely makes sense to take some money out, because you will not find this liquidity again if the market has to turn. If the market continues, fine, the party continues. But if the market has to turn for some reason, then this kind of liquidity won't be there again.
Okay, got that. Aman, hi, good afternoon. So I was looking at some of your portfolios, and what I figured looking at the large cap PMS, the all cap I think you call it, is that you've really doubled down on financials. And while of course the banks are there and one totally understands that, I think you've got, if I'm not mistaken, ICICI Bank, there's SBI, there's even Axis. You also have interesting non-banks in the portfolio, like I think IIFL Finance, Aditya Birla Capital. So my question to you is more on the non-banks. What's the thought process? What's the rationale? And how are you going about picking in the financial universe beyond the banks?
So beyond the banks, we are sticking to the large names, the quality names, which are a decent franchise, and clearly they're going to be the beneficiaries when the interest rate turns, and which is a consensus view now. And we also share the same view that we are, if not almost at near peak of as far as the interest rate cycle is concerned. So the next 6 to 12 months, we are definitely seeing a rate cut both globally as well as in India, and that is a meaningful trigger for the non-banking companies. So that's one of the big rationale for us to have a preference at NBFC versus the banks if one has to take a 12-month view.
Right.
But within that NBFC, we are sticking to the leaders. We are sticking to companies which are leaders or among the top 2-3 players in the segment that they operate into, not going to very small NBFCs.
All right, not going to very small NBFCs. Speaking of financials itself, I do see your portfolio and you do have decent exposure to the IIFL Group through either IIFL Finance or IIFL Securities. Now, of the developments that recently happened with the SEBI barring them to solicit new clients for the next 2 years, of course, law will take its course and the company, of course, will go ahead with the way it has to. What are your thoughts on investment in IIFL Securities and IIFL Finance?
Sorry, I can't discuss on very stock-specific names, so I'll just stick myself to saying that we are positive on the NBFC space. The companies that we have in the portfolio, these are all leaders or among the top 3 players in the respective segment that they operate into, with very healthy growth, profitability, as well as the valuations. So they all trade at valuations which will be below the mean valuations for the sector, and that's where our positiveness and excitement stands. So, sorry, I won't be able to comment specifically on the stocks that you mentioned.
There are some interesting sort of flashes coming at the bottom of the screen. This is with regards to air conditioning companies, basically consumer durables, but largely ACs, and doesn't look good for in the April to June quarter as well, which is Q1. Stocks reflect that. I mean, names like Voltas, etc. Any thought? We'll have Shilpa join us in a bit to talk more about this. But any thoughts on this space, consumer durables? Stocks are it's actually one space where stocks have not done well, although one can still look at and complain about valuations which are still high. Your thoughts, Aman?
What I understand from the ground level is that this season also has not been great for the AC as well as the cooling companies, both in India as well as also for the export market. So because of this and being a seasonal nature, bulk of the profits come during the summer season. And if the summer season doesn't go well, then your full year profits are equally impacted. And hence, we don't own any of these names in our portfolio, nor intend to look at them at least in the near term. Because now the whole call will shift towards how the next season pans out. So we have good another 6-9 months to decide on how the next season is. At least the current season, there is no trigger for me to look at them.
Okay, so not too interested in consumer durables, I guess. Aman, beyond sectors, I just want to digress a little bit into the broader trend that we're picking up. And, you know, we've been discussing this with Nimesh on the show as well. This huge surge in block trades. And very interesting transactions are happening, right? You have some of the foreign private equity investors / quasi-promoters selling out. Sometimes you have, you know, Indian promoters kind of pairing stake as well. A lot of the mutual funds have been very active buying. And since you're in the market, tell us what you are picking up and how should one read this hectic buy-sell activity. A lot of the entities that are selling actually are insiders. I mean, either they are promoters or very large private equity investors. So should this be seen as a red flag? Or is it just a sign of a deep, mature market?
Both. Let's discuss the positives first. Most of the bulk deals that we see, the buyers are long only sovereign funds or long only large funds who have been past investors into India, and they've been investing in India since long. So they understand the Indian markets well. So very few deals we see where there are short-term hedges or say traders which are coming into this block deal. So it's a very good sign that we see serious money coming into these blocks, and we take it pretty positively. At the same time, there is enough liquidity in the market that earlier, if there used to be a block, people used to ask for a discount. Now the situation is different. The seller sometimes even asks for a premium, and the buyer is ready to pay that premium because he's getting the liquidity, which in the current market he might not get at a certain price. So that is also a very positive sign that we have good liquidity, we have good buying interest in Indian stocks. And this is something which one has to take very positively. In some cases, it can be a case that the insiders are selling or the PE guys are selling who have been on the boards of this company, who have been invested for the past 7, 8, 10 years, and they are choosing to decide. But that is very few names that I see where the PE is completely exiting. In most of the cases, what we see is that they are pairing a bit of their holdings that they have. And I think it's more to do with profit booking because markets have moved up, and it makes sense for any investor to take some profits off the table, right? So this is what we see. So I see more positives than negatives in the deals that is going on in the market.
All right, Aman, we would have liked to speak a little more about business and the companies that you like as well, but unfortunately running out of time. So we'll take your leave today on that one. But as we take a short break, just keep an eye on a couple of these small caps which are surging. Blue Dart is now moved to the high point of trade. There was a positive report coming in from Motilal Oswal this morning on that counter. Hindware Home, a stock that Aman holds in his portfolio, in the Abakkus portfolio too, has surged and is at about 8.5% in terms of gain. So keep an eye out on the broader markets, doing extremely well, even as the frontline indices moderate a tad. We take a short break. On the other side, we, as always, get you a check on what dealing rooms are saying. Nimesh joins us again.